Nowadays, as we see, the businesses are transnational or multinational. Let me take an example of a Indian company which has got a branch office, let us say, in USA. Now, the branch office in USA might be doing some business, and the money which branch office earns in USA comes to India after the tax which is deducted by the US revenue from the receipts of the foreign branch office. Now, as you know that Indian tax law operates on the principle that global income of a resident entity is taxable in India. It means that the Indian company is assessable in India on its Indian income plus all its foreign income. In this example, the US branch office. Now, so in this way, the Indian company is having all the income clubbed and it has to pay taxes on that income. To the extent that foreign income from the foreign branch office has come net of foreign tax, that tax is to be treated as a credit in the sense that the foreign income will be included in the total income of the Indian company on which Indian tax payable will be calculated, and against that Indian tax payable calculated, foreign tax credit has to be given. For this, there is a formula. It's slightly tricky that let us say the foreign receipt is 100, which has already suffered say 20% foreign withholding tax. So it means that 100 which has come from foreign country will be included in the income of the in India and on which tax will be payable. Now let us say that out for earning 100 there is an expenditure of 70. So the net income taxable in India is 30. On that 30, the tax payable in India will be about 10, assuming it around one third, 33-34% rate applicable to a domestic Indian company. So it means the Indian tax on the foreign income is rupees 10, but it has already suffered foreign income 20 as withholding tax. It means that only 10 will be given credit in India and the balance 10 shall be a cost, it will be lost. So this is the method of foreign tax credit in the case of an Indian company having foreign branch office. Section 91 of the Income Tax Act and wherever there is a double tax convention case, then the double tax treaty, they govern the method of grant. Now, if I take a converse situation that a for American company having Indian branch office, it will also get credit in its own country. So here it will depend upon the domestic laws of the respective countries. So at the moment, that's why I've covered the Indian tax law, which would assess the foreign branch office income of an Indian company resident in India.